By day, I'm a mild-mannered accountant, but by night, I'm the she-wolf of Wall Street. Hi everybody, and welcome back to my channel, the Call Girls Investment Club. I have a lot of explaining to do because some friends of mine said they don't know what I'm talking about. So the first thing I want to tell you is how I got into trading options. I was married to someone who died of cancer, and I inherited a lot of money. And a family friend told me that I had to learn how to invest, as if it wasn't obvious. I just let it sit there. I just wasn't thinking. I was a housewife. I was the mother of 2 little kids. And by the way, this is we're in the middle of Sky Forest, which is a beautiful place up in the mountains. Everybody deserves to take a break, and this is the reason why we all want to make money, is so that we can spend time with our family and our friends. So I'm really grateful for my friends that invited me here. But I really did want to get back to you guys about some of your questions, because I remember not knowing anything about stock trading. I did have... It's hard to set up the camera in this bedroom. I did have a little experience with a game where I had played stock trading with my dad when I was a little kid. It's called Acquire, and I loved that game, and I got really good at it, and it does run in our family till I love math. But I really think anyone can learn how to trade options and can see patterns if they take the time and they're interested in it. But when I was told by my family friend, you have to learn how to invest in stocks, I was like, no, I just want to pay everything off. And I really don't want to learn that. It's too hard, and it's too intimidating, and it's too risky, and, you know, all those things you're told, you know. But the friend insisted, and that friend was right. If you don't participate in the stock market, you're basically wasting your money, because as inflation goes up, if you're just sitting in a bank account earning 0.5% interest, or a CD, or some safe investment like bonds, traditionally they've gone down in value over the years. And the ones that just sit there, you know, the value of a car might be twice as much now as it was 5-10 years ago. And so basically your money's worth half. So you really should be aware of the stock market. And you're all here because you're interested. So I knew nothing, and I was super intimidated, and so I went ahead and got accounts at a couple different places to try to familiarize myself. I don't remember why I got accounts at multiple places, but I did learn something. I learned that the smaller places don't get as good a price on stocks as the big companies. And I learned that I could put the same order in at a couple different companies to buy a stock, and I'd get a way different price at one than the other. And the reason is they have these things called market makers, which are the guys that are making the trades down at the stock market. And the big companies have the better market makers, or the ones who do more volume. And because they do more volume, they charge less of a percentage per share. So the prices I was getting was much better for a big broker. So that's why I told everybody to go get an account at Schwab. So I was trading like index funds, mutual funds. I started with mutual funds. They're all those things that have an X at the end. Like, I don't remember any of their names, but as the stock market went up and down, the mutual funds went up and down, but they were kind of more muted because they had a basket of stocks in the same fund. So it was sort of safe. So I bought like a mutual fund that dealt with a certain thing, like energy, or a mutual fund that was a financial mutual fund or something. And as I watched these, I started realizing there would be a panic on Wall Street, and everybody'd be selling their stocks, and I was not allowed to sell till the end of the day. A mutual fund only lets you trade at the end of the day. And I'd hear something and I'd think, wow, the stock market's going to go down, and I was right sometimes, but I couldn't do anything about it. I was trapped in this mutual fund. I didn't like that. So then I learned about these things called ETFs. It's a bunch of different stocks that are traded by a company that's trying to make money by doing this vehicle. But instead of a mutual fund where you're stuck until the end of the day, you can get in and out whenever you want. And they're trying to mimic the price of whatever their basket of stocks is. So I first actually started this when I was much younger. I was working in a news station, and I was watching every night the broadcast about the stock market, and I was seeing this pattern of it goes up and it goes down and it goes, and everybody knows that pattern. It goes up and it goes down, and it kind of over time it works its way up. And some expert came on there and predicted some future increase because of something that was going on, and of course the newscaster says that's nice, and then they dismiss them and move on to the next story. But it got me thinking, you know, and I kind of had a dream that night, or a vision of the price of the stock market. It was 1700 on that day in the 80s, and I just pictured it going to 10 times that much, which it has. But I just was like, you know, over time it's going to go up, and I just see this price. And so I searched everywhere to see if there was a way I could buy something. This is before ETFs, actually, as far as I know. I think I was at TD Ameritrade, and or maybe I wasn't at TD Ameritrade, but I was searching, is there something I could buy that would be this whole group of stocks? And TD Ameritrade had just come out with this thing called the ETF in the Dow. And I was always seeing it going up and down, and I kind of felt like I could figure out when it was going to be up and when it was going to be down. And here they had this vehicle. So I started trading this ETF, right? And then I got really into stocks. This is sort of a sidetrack, but I started thinking, you know, why do these mutual funds have different returns? Some of them are, there's some that are traded by experts, you know. What makes them go up, you know? So I joined this thing called Morningstar, where I could see what all these guys were buying. And then I started noticing on Morningstar, I could see what they were buying and when they were buying it, and they'd buy it over time. So like, the one that was doing really well had this thing called Baidu, which was this Chinese company, and that was like this thing that was going bigger and bigger in their portfolio. And I thought, well, maybe I'll just go along for the ride. They know what they're doing. So I bought some Baidu, and instead of buying the mutual fund, I bought just the Baidu. Well, I also noticed, if you look at these informational things on Morningstar, which I still haven't found again, I'm doing other things now, but I noticed you could see what are their best returns, and like the Baidu was giving them like 53% return in the year, and everything else wasn't so much. So then I bought more Baidu, you know, and I started looking around at other successful money makers and what were they buying. I mean, this is back in the time when nobody bought anything in China, you know. So I started doing that, and basically the essence of everything I've been doing started with just looking at the people who are successful and knowledgeable and sort of deciding to follow along with what are they doing. And then buying just the Baidu was a riskier approach than just buying their whole portfolio. I thought I was going to buy their whole portfolio. But then I realized that I was basically seeing trends and making more money. And I thought a lot about it, and I thought how if the stock market goes like this, and they're saying buy and hold, get into our fund and we'll give you the returns, you know. And I'm thinking, well, if it's going like this, it's like an elevator sort of. If you hop on the first floor and you get off on the third floor, this is three, I don't know how to explain this, but basically if you just take the chunks where it goes up and stay in, and then you sell here, and then it goes here, and then it goes up, and you just do that chunk, and then it goes up, and you just do that chunk. If you add those three chunks together, you've got this much gain instead of this much gain. So I started trying to do that with stocks. And I had a lot of money in my inheritance, so I'd buy chunks of $100,000. And then I started putting in an order every day for the same day. If it hits 2% returns, it'll just automatically sell. I just put in a sell order. It's called a limit order. And I'll explain in every detail, every term. Just bear with me. So I put in an order to sell as soon as it hits 2%. And sometimes the stock would go up 5% and I'd be kicking myself, but a lot of times it would just get up to 2% and drop. And I'd get my profit, and for the day, the stock didn't do anything. So that was part of my education. But the way I got into options, basically, there's one other thing that happened that was really cool I just want to share. There was this thing called PHK, which is a high yield bond fund, and I had been putting a little of my money into that. It has higher returns and it's more risky. But bonds are basically paid off before stocks. So it's considered slightly more conservative. And this had this famous guy running it. I forgot his name now. Bill Gross? Yeah, Bill Gross. And believe it or not, my family friend also told me about that. So then the financial crisis hit in 2008, and Countrywide went bankrupt, right? Countrywide had all these loans. So basically loans are what this bond fund invests in. They bought all the Countrywide loans, and their stock price, their bond price plummeted from $14 to $3. And they always pay this consistent dividend. So the dividend that they would always pay based on a $15 stock price was something like 10%, and on a 3% stock price was like 25%. So everybody is avoiding PHK, and it's down to $3, and it turns out the US government guaranteed Countrywide's loans because they didn't want a mass problem. So they basically stood by, guaranteed these loans would be paid, and which basically means there's zero risk in the Countrywide loans that PHK bought with huge returns. They have a consistent dividend. So I bought a whole bunch of PHK when it hit $3. And I actually was foolish, and my friend told me, wait till it hits $3. And I bought a bunch at $10, and I bought a bunch at $5, and then I was like almost out of money. And I did this thing called a margin buy, where I borrowed money to buy more at $3.14, and it dipped down to like $2.98. And it turns out when it hits $3, you can't use margin money. So the brokerage is calling me saying you have to pay us back. And I'm like sitting there praying, and the same day it went back up above $3 and closed above $3. I was so relieved. And then it climbed back up to $15. So basically my investment went from $3 to $15, and I was getting 25% on all the money I invested, even though the price was back up here and they were only paying 10%. I only invested this much, so my return is basically $25 still. So that was a cool thing that happened. And then I really got a taste for this, and then I had some difficulties. And when I had difficulties with finance because of my divorce and all the horrible things that I went into in my Tesla Chick Life channel, I was desperate for money. I had health problems. I had special needs schools I was paying for. So then I thought, if I could buy, I heard this thing about options, and I realized I could multiply my income by 10, maybe 30 if I was buying options and doing these little increments instead of, I was already good at little increments. So I switched over and started buying options because I didn't have 100 grand to invest anymore. I had like 10 grand at a time, maybe, because I didn't want to invest all of my money at once. And to this day, I'm only investing like 10% at a time. 10% at a time, because options are very risky, and because you don't have to invest 100% of your money to get 100% of the stock that you're interested in buying. So that's the beauty of options. Anyway, enough for this video.